We did a quick change during the break. It's Jerry Todd now live in the studio. He's with Property Care, propertycarehouston.com, 713-489-7653, 713-489-7653. So we're teaching a lot more. You know, Right Path used to teach a lot about buy, fix, and flip, and then also a lot about wholesaling, because that's primarily what our business, Houston House Buyers, has been. Mm-hmm. But we're shifting. We're doing a lot more helping people get buy and hold properties, because the numbers on buy and hold are just ridiculous right now as compared to anything else that you could invest in. Mm-hmm. So if people are not investing in buy and hold right now, they're really missing out on true wealth building and income building. And those two are separate. Building wealth and building income are different.
Right.
And so what are you seeing going on in the Houston market right now? Is a big concern people have is, days on market in terms of leasing a property, things like that. How long are you seeing it's taken to lease properties? And is it, better in spring or worse in spring? Where are the hot areas? Where are the slow areas? I know I'm putting you on the spot, but
yeah, I mean, to go back to just real estate investing in general, if you just consider the cash on cash return.
Oh my gosh.
People don't think about that, but
it's even better than that. The best thing that we see right now is the appreciation.
But that's all unrealized, though.
I realize that, but that's
you realize that's funny.
I realize that's unrealized. Mm-hmm. And however, it's the leverage, because people are like, well, it's only appreciating at 7%, which doesn't sound all that great, right?
Right.
But it's a leverage 7%. Even if you bought a house retail at $150,000. Mm-hmm. And you had, and the bank says, hey, Jerry, we need you to put, 20% down, and you finance the 80%. You're going to borrow $120 on a $150 purchase, so you've got $30,000 in that house.
Right.
Well, it's going to grow. We're averaging right now in almost every market below $200,000. Yeah. It's averaging 7% per year appreciation.
Right.
7% on 150 is 10.5. Mm-hmm. That means that on appreciation alone, nothing else, you will make back your $30,000 out of pocket. In 3 years.
Right.
In 3 years.
Right.
That's ridiculous. There's nothing else that's making that kind of return anywhere.
And I tell you, I just had this conversation with a friend where they bought a house, 105, back in 2014.
Right.
Right. And it's gonna be on the market for like 160.
Right.
And they're like, oh, well, we're only gonna 50. Oh, okay. Like, I don't know what other product is gonna give you 55,000 in return.
You wish you had 100 of those, right?
But I was like, no, you're thinking about it wrong.
Right.
How much cash did you actually put in?
Right.
You're netting, 55, but how much cash did you outlay in order to make that?
Oh, we were only $6,000 out of pocket, right?
Right.
Yeah, they made $55,000 on a $6,000 investment.
Exactly.
Yeah.
That's a ridiculous return.
Yes, that's 10x.
Mm-hmm.
Right.
So that's the mindset. It's like, oh, well, I'm only netting, this much, or
it's only appreciating 7%.
I invested 105. Like, no, you didn't.
No, you didn't. No, right, you did not.
You only invested 6,000.
Right.
Or how much you put in cash.
Yeah, go try and do that with Exxon stock.
Right.
Go try and put $30,000 down and buy $150,000 with Exxon stock.
Or go borrow money
to buy stock.
Yeah.
Right. Yeah, you can't do that. Right, especially the interest rates that you're borrowing. I mean, could you go get a personal? I mean, if your credit was great, and you had $1 million in the bank, they'd probably lend you $500,000 to go buy some stock.
And the other thing I point out is that you can touch it.
Yeah,
it's a tangible asset. It's not this like
I don't care
number on the screen.
We could go to war with Syria or whatever is going to end up happening. Mm-hmm. People still need a place to live,
right?
And it's like as long as you're providing good housing for folks, it's like it's a crazy good investment right now. So where are some great areas where are people wanting to live right now as a rental? Is there a bad area for rentals?
There's always different pockets of neighborhoods.
Yeah,
and as far as sales and rentals goes, a lot of what drives sales is what drives rentals too, meaning schools.
Yeah.
People love, if you're moving from an apartment to a single family home, it's probably because you may have a family.
Sure.
And when you have a
more
family,
importantly, you probably have a dog. You need a yard.
You
need a yard.
Something.
Yeah.
And, schools is a big driving factor. That's why Katy, certain pockets like, Cimarron and stuff, they will always do well just because the schools perform so well over there. Accessibility. I find it way more difficult for houses deep in. Like if you're stuck on Louetta between 249 and 45, that has a harder time getting rented out versus something that's closer to 45 or 240, 49.
Yeah.
So those are driving factors that I see. I mean, as far as a personal preference, I like to rent a home next to a Home Depot.
Yeah. Right.
Just to make things easier as far as getting things here and there. But I mean, those schools and accessibility are.
So really, if you were putting together a marketing plan, you'd find you'd do a map of the Home Depots around and just market the little within 1 mile radius of Home Depot, huh?
Preferably, so just to make my life a little easier sometimes.
Yeah, right. Now, do you go into Home Depot very often yourself?
Not so much.
Okay, you're not being honest, are you?
No, no.
Are you blushing?
No, I try. I actually got mad when I do go to Home Depot.
Yeah,
it's an online order.
Okay, got it.
And I just need something I get from Home Depot. I try to order first. I have a bad experience every single time I go to Home Depot, and I just hate going to stores. So again, my time is important. I hire a guy that knows everything I need to get from Home Depot. I do not step in Home Depot. He already knows what light fixtures, the usual. I don't step in Home unless it's like a one-off item. I want the specific item. I try to go there, but waiting in line, it's online. The online pickup is the same line as the returns.
Yes.
If you're stuck behind 4 or 5 people on returns, there goes your hour.
Or two,
right? Or two,
right? Exactly.
It's I don't even know why I did an online pickup.
It's a $4.19 hose bib. I mean, really?
Yeah. Right. I mean, the idea was I did an online pickup so I could just in and out.
Right. Yeah.
I didn't expect to wait. Behind 5 people.
Right.
At Home Depot. So
yeah, that's frustrating.
Nuts.
All right, so if you need somebody to manage your properties, here's the thing: people say, "Well, Tom, I want to manage the first 1 or 2 or 3 by myself, and then once it gets bigger, then I want to go ahead and add property manager to what I'm doing." What would you say to somebody that's thinking like that?
Well, it's what your goals are. You got to ask yourself. The question is, if I manage my own rental properties, would that help me buy or have 10 rentals that I was hoping to get?
Right.
Would that take away from it or would it help it? And I think, 10 times out of 10, the answer is going to be, it's actually going to hurt my ability to obtain, reach my goal of getting 10 rental properties or 20, 30, 40, 50 that I was wanting to get.
Well, I tell people, hey, look, there's a certain skill set to be good at property management. And like a lot of things in life, the more you do something, the better you get. But you also have to have an aptitude for that, right?
Right.
And so what I'd say is if you're not doing this on a regular basis, you're not going to be a 10 at this. Just do a self-evaluation. And people go, oh, well, there's not that much to it. Stick a sign in the yard, It's like, no. What I find is those are the people that end up with the tenants that you end up evicting over and over and over again. I love your statistics that you've shared with me before, that your eviction rate of tenants that you've screened is pretty close to 0%. Now, every now and then you're going to screen a guy. He had a great job, all that kind of stuff. He gets laid off. He didn't have, a year's worth of savings. I mean, he gets behind in his bills. Okay, he's not paying his rent.
Right.
It's just a sad situation, right? That's not that you did a poor job of screening. But short of that example, it's pretty close to 0% versus when you've inherited a property, that already had a tenant, you inherit the tenant because it came with the property. It's pretty much 100% eviction rate. I mean, that ought to tell you that the average person out there managing their own properties is not doing a very effective job of managing their own property.
Right.
I had a guy yesterday I spoke to on the phone talking to him about a property. He inherited a property, it has a tenant in it, and he said, "Look, we want to sell the property." And I go, "Well, what's your rental rate?" First answer out of his mouth is, "Well, it's below market rents." I said, "But of course, because you know what? No one's ever said, 'Oh, we're getting way more than market rents. We're just slaughtering it.'" I'm like, everybody has below market rents, right? I mean, that's otherwise, why would they? Yeah, and I'm like, well, it's always fascinating. That's the first thing when I say, "Well, how much are you charging in rent on this property?" "Oh, it's way below market rents right now." Do you run into that too?
I run that a lot, and the amount of times where I hear someone say that. If you run the numbers, you're actually losing money month to month.
Yes.
I can see why you want to sell because it makes absolutely no sense for you at all.
Don't tell them that because we buy those houses because they're not good deals for those folks because they're.
Yeah.
We actually bought a house one time and this guy was being charged. It was way below market rent, paying $400 a month.
Yeah.
And market rents were like $800 a month.
Yeah.
And so you know what we did? Next time his lease came up, we raised it to 800, and everybody was like, "Oh, you can't raise it that much because he'll leave, right? They can't. If he can only afford 400." And guess what? He was paying the 800. Where else is he going to go find him? We get this head trash where we assume people just do what you need to do and let people figure out what they need to do.
The other thing I get a lot, self-managers, right?
Yes.
Oh, I gave the tenant 1 month's rent for free because he fixed the bathroom.
Yeah.
And then we go in there and we're like,
you call this fix? Duct tape is not a fix.
Yeah. Like, I mean, okay, the thing is like if they're going to do the flooring in the bathroom, it's never done.
Yeah, right.
The material is always laying somewhere in the house.
The tile is all out of whack, and they haven't laid the grout yet, right? And now you got all kinds of dirt and debris and stuff like that in the grout lines, and and they didn't use spacers, and they didn't use the right kind of thin set, or they didn't float the floor. It's all
uneven.
Yeah, and you're like, I don't. We actually have to undo what he did. Hey, you're listening to Right Path Real Estate Radio. That music says that we're out of time. It's propertycarehouston.com, propertycarehouston.com, 713-489-7653. Thanks for coming in, Jerry.
All right, thank you.
Thanks, man.